Well, you know that sound. It means today's closing bell at the New York Stock Exchange.
Dow Jones closing the day. Looks like relatively flat. Numbers still settling, but pulling back almost 60 points. The S&P 500 and NASDAQ also ending the day relatively flat.
Geetu Sharma joins us now. She is a founder and investment manager at AlphasFuture. Geetu, good to have you. We're going to start off with that question. You know it. What was driving the market today?
I think clearly we had a bit of risk off day today. I think it's driven by the expectations of what the inflation numbers will look like tomorrow, the CPI, and on Thursday, the PPI numbers, and whether we will get the decline in inflation that investors and markets expect over the next few months.
Now, we know there's been ups and downs in the regional banking sector, particularly PacWest, just in the past week. Where do you think things stand for investors in that sector? And what about commercial real estate? We know that's another place that's getting these negative predictions.
Yeah, I think there is a lot of concern around the regional banks and commercial real estate. The challenges, of course, we have high interest rates, and the impact of that on deposits, on yields and rental income, and the kind of net interest margin that banks are able to earn. That is a concern. We are seeing a lot of these banks that have had deposit runs or have kind of headed into bankruptcy is largely driven by mismanagement in interest rate risk and liquidity, and not so much credit risk. But I think it's not clear whether which of these banks are actually able to come out of this crisis right now. And I think both depositors and investors are concerned about where the regional banks are headed.
Let's talk consumer price index. That report comes out tomorrow. The producer price index report is being released on Thursday. How much does all of this information influence the Fed's decision on what happens next regarding interest rate hikes?
I think they're very important data points because the Fed has one target to bring inflation down to 2%, and the Fed looks at core PPI as the key number. And markets are expecting inflation to be still at 4.5 to 5% year on year right now, which is much higher than the Fed's target. And so if we do see a higher reading than what is in the expectations right now, I think this would imply that Fed's job is not yet done. Inflation is still high, and it's already at high number. And so the markets, it would imply that interest rates will need to stay higher for longer, and that would be a concern for the financial markets.
All right. Geetu Sharma, thank you.
Thank you.